Okay, thank you.
Okay, first question.
Tradition. There is a tradition to be respected.
Where's the host?
No. We have our tradition here. Yeah.
All right, I'm going to ask you a broad one right now.
Yeah.
Look at the new year, look at the challenges you face. This is an industry that in some places going record, some places it's collapsing, in other places nobody knows what's going on. So can you make some sense out of what's going on and some of the trends you'll see in 2016?
Yeah. Well, I'm not sure I can make sense out of this, but I can at least tell you. What's our vision of 2015 and our vision of 2016, which, by the way, are not very different. It looks 2016, fortunately or unfortunately, in our opinion, is going to look a lot like 2015, or at least the way we were looking at 2015. Let me go a little bit market by market. On the positive side, recovery in Europe, we see it continuing. But probably not at the same pace than what really happened in 2015, probably at the slower pace. But this being said, I want to tell you that we have been wrong on the forecast on Europe for the last 3 years. So systematically, we saw a smaller growth, and we have been, in fact, de facto contradicted by the facts. In fact, Europe has recovered more in 2015 than we thought it would recover. Second, also, area where we see moderate growth is the US. We see the US growing by 1%. We end up the year at 17.5 million. It would be fair to say that this was more on the upper side of all the forecasts which were made during the year 2015. So we are a little bit more moderate. We see a plus 1%. We hope we are wrong. We were wrong last year because we were between the most conservative on forecasts in the United States, and it has been contradicted by the events. We think China, as you know, everybody is very bleak about China. Everybody has been also nervous about China in 2015, but the market in 2015 in China ended up with plus 5%. It's interesting that plus 5% is a disastrous number seen by some people, while the US, everybody's happy with 5.7. I mean, there is no big difference between the growth, even though from one side, it's a 5% coming after many years of double-digit growth, while in the US, it's a completely different story. We still think 5% in China is a very reasonable level for 2016. India is doing well, continue to do well. We think that the difficult spots are going to remain the same in 2016. Russia, Brazil, Japan are going to continue to decline, unfortunately. We are practically sure about the decline in Brazil. We're practically sure, unfortunately, about the decline in Russia. And also, I don't think we're going to see any resumption of the consumption in Japan. So 2016, not very far from 2015. Overall, I would say a plus 1 to 2% growth. When you compound all of this, you end up with a very moderate growth, but with a completely different stories, depending on where you're standing. Car makers will continue to develop a lot of technologies. This is something that we've done in 2015. It's going to continue in 2016. The emergence of the zero-emission transportation, you see every year, more car makers coming to electric cars, to the fact that even though it's still not a very strong consumer request, but everybody come to the conclusion that there is no way we can meet the emission regulation in the future, no matter we're talking about China or the United States or Europe, without a significant portion of our sales in zero emission or in ultra low emission, which means plug-in hybrid. Plug-in hybrid is mainly an electric car with something added to it, and not a gasoline engine with a motor on it. That's the way we're seeing it. So this is a global picture. 16, not very far from 15. Very contrasted situation between the different markets. A lot of technology, a lot of investment, not in capacity, but in transformation. Some segments will grow much more than others. You've seen what happened in the United States. The growth in the United States is concentrated on compact crossover, particularly, which has been the big boom. But this compact crossover segment is growing in Europe. It's also growing in China. So we're seeing also some trends globally taking place. I don't think you're going to see a big change in 2016. I don't think, and frankly, I don't believe into the doom scenario. I'm anticipating the question on China. I don't buy it. I don't think China's going to crash. We had this story many times last year. I don't think we're going to have a double-digit also growth in China, but we're going to have a kind of very volatile market. But at the end, it will end up, in our opinion, around 5%.
Yeah. Bonjour, Carlos. Jean-Baptiste Su with Forbes Silicon Valley. A more technical question. What are your thoughts on over-the-air updates of cars and vehicles? And when do you think we're going to see Nissan or Renault-Nissan adopting it?
Adopting, I'm sorry, what?
Over-the-air upgrades of cars. So software updates. That
means immediate.
Yes.
Immediate software. I think this is something that is very serious. For one, there is one single reason behind it, economic reason, which is extremely important, is the fact that obviously we all look at the resale value of our cars. This is extremely important. And it's true that today when you buy a normal car, the day after you bought it, it loses value and it continues for a while. The only way to stop that or reverse this trend or maintain this trend or fight against this erosion is continuous update of the car. That means and continuous adaptation, installation from a distance of some new functionality into the car. So that's why I believe, because of this economic impact, which is extremely important, I think everybody's going to go into this direction, including us. We're not ready yet. But you're going to see in the next 3 years, with the development of autonomous drive, with the development of connected cars, I would say, adaptation from a distance of the software in the car with all the functionality you go with it will be part of this trend, okay? For economic reason.
Time frame?
I mean, I would put it in the same time frame than the autonomous drive, which is 2020. It doesn't mean that we don't start before, but I would say put all of this into autonomous drive in cities 2020. 2020 is going to be seeing a lot of convergence of a lot of technology coming.
Hi, this is Kevin Allison from Reuters Breaking Views. You had just mentioned car makers investing heavily to meet emissions targets, creating technology that consumers at best are probably a little bit ambivalent about. They might not necessarily be demanding themselves. And now you've got low gas prices actually encouraging some consumers to switch back to heavier vehicles. If gas prices stay low for a decade, how can the industry fix this problem? Doesn't it create how do you reconcile that disconnect? Do you need to try to pass the cost of these technologies that consumers aren't really demanding onto them? Or do you get together as an industry and try to lobby for a gas tax to fix the problem?
Well, you're right. It's a complex problem. But at the same time, let's not underestimate the fact that first, the consumer is conservative, is very conservative. And second, he anticipates what the regulators start to talk about. Okay? He anticipates. Let me give you an example. Let's take the case of diesel in Europe, which is a very interesting case. Diesel in Europe has grown a lot for many years, represent more than 50% of the market in Europe. I don't think it was because there was a market demand for diesel. In fact, the regulator and the governments put so much incentive behind diesel that at the end of the day, it ended up being 50% of the market. You can say that it was consumer-driven, but it was practically generated by a set of advantage, incentive, good direction provided by different European governments. Well, in the United States, it didn't happen. Well, the consequence is the consumers are not buying diesels, and in Japan also. Exactly what I mean. We're in the same category of countries. We're Europe, Japan, United States. We have the same car makers. I mean, a lot of exchanges. 1 out of 2 European buy a diesel car. 0 Japanese and 0 American. Okay, I don't think it's a consumer-driven. I think it's driven mainly by regulation. Okay, what's happening now? Well, now we have reversed because we have a little bit of diesel bashing in Europe. Okay, so what happens? Well, the consumers start not to buy diesel, not because they are anticipating that because a lot of governments in Europe are starting to say, we need to reduce diesel, we need to eliminate incentive on diesel. What they are afraid is if they buy a diesel today, well, the resale value of their car is going to drop. and we start to see a shift, even in countries which are heavily dieselized, like France, toward gasoline engine. And the limitation to this is the fact that you can't provide as many gasoline engine cars as consumers want. Because obviously we have capacities, we have installation, we have suppliers, we have, it's going to take a while to shift. So our industry is not driven only by what the consumer wants. Our industry is also driven by what the regulator and government are giving as a serious signal about where we are heading. And today, all the signals are going towards emissions are going to be a big factor. Zero emission is something that many governments want to see happen. And it's going to take some time before probably the consumer jump into it. But frankly, everything you read, COP21, all the resolution on limitation of emission, etc., all of this is pointing to the fact that it's going to be impossible to reach the levels which are required without a strong contribution from zero emission. It's going to take some time before I agree that the consumer jump onto that. Why? Because they still consider electric car expensive. They still see that there is no infrastructure of charging. So they see some obstacles. But when you start to see the infrastructure put in place, the range of electric cars going up, the cost of electric car going down, I can bet that you're going to see a major shift towards electric car. And look at Detroit. What's happening today in Detroit? A lot of car makers who were at the beginning a little bit, if not hostile, at least certainly neutral or skeptical about the electric car, are all coming with electric car and saying we're going to invest, it's the future, etc., etc. Okay, but again, I agree with you. This is not going to be an easy shift, but I don't see how we can escape this one.
Hi.
You're distributing the question.
Hi, Rick Newman, Yahoo Finance. The economic volatility you mentioned earlier, including exchange rates, is that causing any unusual changes in the way you're considering sourcing or production?
Well, frankly, I can tell you that we have in 2006 made a very important decision to localize our production everywhere. And we've been through a cycle where the yen was extremely strong. It went down to 75 yen to the dollar, up to 124. Now it's at 117, depending on the day, and nobody knows exactly where it's going. So the only, and you name it, the euro versus the dollar, the ruble, the real, etc. The yuan also. So the only possible and responsible way, I think, for a car maker is, as much as possible, source where you sell.
And that will remain the same?
It remains the same. It's not going to change. Yeah, because if you start to be smart, if you start to be smart by saying, oh, the yen is weak, let me, you're going to be caught in your own game. So it doesn't change anything for us. We are continuing to invest where we are selling. It doesn't mean we're not being opportunistic. Let me give you an example of opportunistic behavior. For the moment, our capacity in North America are full. You see? You don't have any more capacity. North America, Mexico, United States, everything is full. Okay? So in order to support the development of the sales of Rogue, we have said, okay, let's get, because we have some capacity in Korea, we said, okay, let's get some Rogue from the Renault plant in Busan in Korea. We got them. To see, how much the sales will grow if the US market is going to continue to privilege compact crossover. Well, it continues. Well, obviously, in the meantime, and preparing for investments in the Americas, we're going to use capacity from Japan. But we're going to use capacity in Japan not as a shift of strategy, but as an opportunistic move, which probably would be temporary, because we don't believe that sustaining supply from Japan to the United States is a safe strategy. Safe strategy is localize as much as possible in the Americas, and particularly, in fact, it's mainly into dollar zone versus euro zone versus yen zone versus et cetera, et cetera. And in Russia today, you see very well that those who are not localized in ruble, everybody's suffering in Russia, but those who are less localized in ruble, it becomes unsustainable. Same thing for Brazil. The fact that the real is at 4.02, while it was at 1.7 a couple of years ago, make all the people importing parts, I mean, they are irrelevant on the market. So this is a lesson for all of us that if you want sustainable business, you should localize.
Okay, Tanguy, right here.
Yeah, hi, Tanguy Kemener with Agence France Presse. It looks like, talking about localization, it looks like sanctions on Iran will be lifted pretty soon. And Iran used to be a very big market for foreign car companies, especially the French ones. And I was wondering if you were confident that the alliance would be able to benefit from this new situation and increase eventually its industrial footprint.
Yeah, we hope so, but still, you know, sanctions are not lifted. I'm turning to our legal counsel here. I always call him and tell him, can we go to Iran? He say, no, wait a minute, not done, not signed, not whatever. So we have to be very careful. We have to be extremely careful. Yes, Iran is a very promising market. Yes, today it's more than 1 million car. It has the potential to go to 1.5 or 2 million. Yes, the French maker are very strong in Iran for a very simple reason is the French maker have no exposure to the US market. Yeah, but we have to be careful because there is a lot of agreements, but still the green light given by our legal counsels are not given yet. So we're ready to go, but we want to go in a way which is sustainable. We don't want to go too precipitously and create for ourselves a bigger problem than we need. So I think, yes, a lot of potential in Iran, but still the timing is going to need to be politically correct and completely cleared from a legal point of view.
John Lippert from Bloomberg.
Hi, Mr. Ghosn, thank you. So I want to ask a more specific question about emissions. So the U.S. and California regulators are saying, you know, that the 2025 targets are affordable, companies are ahead of schedule, it's doable with existing technology, all with the idea of saying the midterm review that's coming doesn't need to change a lot. So do you agree with such comments?
Who's saying that?
Regulators.
Well, I obviously agree with the regulator. What do you want me to say? What do you want me to say? You want me to be in trouble? No, I mean, there are all the technology. No. All the technology is available. The question is, what's the price that the consumer is ready to pay? That's a struggle. You know, this is a struggle that we are facing. I mean, if you can say, okay, scratch all your cars and build only electric cars, well, yes, we can meet zero regulation, zero emission, okay? But we know that it's not feasible because people don't want to buy electric cars or they want to buy something else, etc. So we have to marry what the regulators want from one side with what's coming from the market from the other side. And this is the balance that we need to reach. Yes, there are plenty of prototypes and technology is exploding. Fuel cells, electric cars, plug-in hybrids, and now you have fuel cell with many kind, not only with hydrogen, with any different kind of combustion or different combustion. I mean, technology is going to be extremely developed. The question is not technology. It's not, obviously with time, anything you can transform into prototype, then cut the costs to scale, etc. The question is, at the end of the day, you have 85 million cars sold every year, and when you look at what is sold, it's very conservative. What is sold today is compared to the available technology. Consumers are extremely prudent. They are, buying a car is a very important buy for them, so they are extremely wary about the price they pay, the resale value, the total cost of ownership of the car. So we have to be careful. And this is a debate we have with the regulator of all the countries in the world. It's not a question of technology. It's a question of marketability of the technology. That's why we always ask for, give us vision. Tell us what we need to achieve in 2025, 2030. Why? Because we can prepare for it. Don't come with something the next 3-4 years. We don't know how to manage that because even we have the technology, we need the time to develop the technology and make it affordable.
Okay, David Booth.
David Booth, Post Media Driving. Infinity needs a flagship. So far you've shown us like an Eau Rouge, an Inspiration, and then you tell us that, well, they probably won't get made. When will we see something that will represent Infinity's flagship model?
Well, we have to go step by step in Infinity. We have to go step by step. We're You know, obviously, the perfect world, we will have a much more complete lineup with flagships, etc. But I think the most important thing is to have a good definition of the brand, start with the bread and butter of premium. You know, you can go to flagship if, for example, you don't have four-cylinder, engines or diesel engines in Europe, etc., which is being made, okay? So we are covering the basics of the premium business, covering it well, because for the first time, thanks to Roland present here and his team, we crossed the 200,000. We ended up with 215,000 cars sold in calendar year 2015. Next year should be another year of growth. We're going to go step by step. Roland, maybe you want to add something?
Yeah. Of course, this question comes up a lot, but as just mentioned, we're developing the market step by step. What we show today, to me, is a brand shaper, very clear, because of the design, the technology we show in the coupe. It builds on the heritage of the brand. So this is the next step into developing the brand for Infiniti, the Q60 coupe. Also, we show the QX30, which is an enlargement of our product portfolio. It taps into a new customer group, product that we were not present in that segment yet. So step by step, we're developing it and lay the fundamentals for becoming one of the top-tier players in the premium segment. So all the fundamentals are there, and we will develop these cars one by one.
Robert Wright from the Financial Times. I want to ask two questions about rather different areas. We've just had a round table with Sergio Marchionne, and he was talking about these issues about electrification, and he was saying that electrification risks exacerbating what he calls the disintermediation in the industry, that car companies have lost control of key parts of their businesses, and he says that the switch to electrification risks making that worse because you won't make the batteries, you won't make the electric motors. And I wonder, could you tell us, first of all, if you share that concern and what your analysis is of how you should cope with that?
I mean, the beauty of the car makers is that every car maker has different opinion. That's the beauty of it. So I think electrification is not a question that I want it or I don't want it. Electrification is happening. It's happening. We're obviously precipitating it. We're accelerating it because we believe in it. And it's happening. So you can't just say, you know, there is a risk behind electrification. It's like globalization. Globalization is happening, no matter you want it or not, if you think there is a risk or not. So you need to play. You need to play by it. The risk is not to partner or to participate or to contribute or to understand the trends coming. You know, for example, this is a lot of discussion about, you know, connected cars and autonomous drive. People ask the question about, is Apple a risk or an opportunity? Apple car, for example. Well, I can tell you it depends how you position yourself. If you are passive and staying behind and saying it's not a good thing because we're going to lose control of X, Y, Z, this is a risk. If you say, wow, there is something interesting for the consumer, let me, you know, jump onto this opportunity and work and build my own business system in order to be able to offer it, then it's an opportunity. So that's why, you know, again, I mean, we are the last person to tell you electrification is a risk because we have taken the initiative to come with electric cars and to move into this direction and build motors and build batteries and in a certain way open the batteries for other suppliers. You know, we have our own battery, but at the same time we buy batteries from LG Chemical. So it's a slightly different opinion.
Mr. Marchionne's analysis was that this was further evidence for his thesis that there should be greater consolidation in global industry because returns are going to be lower. And so one other follow-up is, do you think the US luxury market, the world luxury market, is becoming overcrowded?
Do I think the US or car market?
The luxury car market is becoming overcrowded. There are too many entrants in the industry.
Frankly, I mean, the trend of consolidation and globalization and consolidation of the industry, we were the first, not company, to say we're going into this direction, but to act on it. The Alliance is the biggest act of the fact that this industry is consolidating and you need to globalize. But at the same time, we didn't do it either way. We said, but it needs to be done with the respect of the individualities and the cultures of the different parts. That's what the alliance is about. Because you remember that we were the first one to move, we were the second one to move. The first one were Daimler, Chrysler, Mitsubishi, and then we followed with Renault-Nissan. Except we're done completely different way, because Daimler, Chrysler, Mitsubishi was a merger of equal that was managed from Stuttgart and exploded, because neither Mitsubishi nor Chrysler found their place into this company, and we stayed 16 years after, not because we have done things different, it's just because we said we don't believe into merging companies which are so proud of their entities and their culture and their identity and their brands. Okay? That's it. So we are the first one to tell you, yes, obviously reasons for consolidation are here and they are multiplying. Except that consolidation is not going to be A buys B, or B eats C, or C wait until D is dead to try to create a new company. It's A and B are alive, and they want to keep their identity, and they're going to work together in order to both benefit from a larger scale. That's the alliance. And we're not doing it with Renault-Nissan, we're doing it also with Daimler. And it's working. I mean, we have been working with Daimler now for 5 years, and we developed a lot of projects. So without any doubt, consolidation is on the move. You know, multiplication of technologies, multiplication of bodies, multiplication of markets, introduction of new features where people outside of the industry may be moving in, like autonomous cars, connected cars, etc. All of this makes consolidation necessary, because you can't follow the investment in all the technology and presence in all the markets and being present with all. You can't. No matter what is your size, you can't do it. And certainly you cannot do it well. If you have the surface in volume, you can't do it well. So you need to partner. You need to create alliances. You need to work with other entities, even though you're competing with them. And that's what the alliance is about.
Mr. Ghosn, question over here. Yep.
Hi, Mr. Ghosn. We saw today the Bolt with the more extended range. So I have a question about if we saw in the Leaf something like facelift or that to make bigger range from for the batteries, or we need to wait for the next generation of that car to show a big step in that?
Yeah, well, obviously the Leaf is going to go through a lot of transformation. First, you know, we announced more autonomy, more range, but there's going to be a new Leaf coming. You know, we didn't take the leadership of electric car to abandon it. That means we're going to be fighting for it. We're going to continue to develop cars, but we would like to make an announcement just before the cars come and not a long time before. So you're going to see us coming with products, with technologies, with enhancements, with reduction of cost and range to be present on this market. Except that when I come to the battery, for example, because you mentioned the range, you're not going to eliminate range anxiety only by having a better batteries. I don't think so. You can go to 200 miles, 300 miles, 400 miles. You're going to always have anxiety. The anxiety is going to be eliminated only when you're going to have a charging infrastructure which is widespread and visible. Okay? I don't know. I mean, you bought how many cars in your life? You know, I bought a lot of cars. I never asked myself the question, what's the range of my car? Never. Why? Because you have combustion, you have gasoline station all over the place. Okay? So I don't care. When 200 kilometers, 300, 400, I know that I could stop at any moment and charge my car. Why people have the anxiety on? First, it's because the range is smaller, and because there is no charging station. And the charging time. And the charging time. Okay, so we need to, this is going to be the real and final answer. It doesn't mean that we shouldn't improve the range. We are improving the range. We're going to continue. But I don't believe on the fact that we're going to eliminate the range anxiety without a obvious presence of charging station and also the reduction of the fast charging operation. 30 minutes today, but I can tell you a lot of suppliers are coming already with devices proposing to us up to 10 minutes of charging time.
Stay right there. Your next question.
Hi, you mentioned in your first response that you see Europe recovering the recovery continuing, but perhaps at a slower pace. I was wondering if you could expand upon that in the sense that obviously in the U.S. there was a banner year last year, a record and so on, but Europe is still far away from where it was pre-crisis. Is Europe ever going to get back there? If so, when? And if not, a lot of people are talking about changing trends in Europe and demographic changes and, you know, all these factors working against the car industry.
Yeah, well, I mean, obviously, it's difficult to write the future, but I would say there is no reasons for Europe not to come back to where it was before 2008, but it's going to take more time. Yeah, as you know, the market in Europe went down much slowly than in the United States. The United States went down very quickly, recovered very quickly. Europe, the fall was slower, and the recovery is slower. Is there any fundamental reason for which Europe would not come back to 2008? Frankly, I don't see it. I don't see it. Car park is old. It has to be renewed. You know, many countries in Europe don't have demographic problems. That mean, France population continue to grow. Eastern Europe is growing. I mean, there are a lot of reasons for which we don't see why Europe all of a sudden would question, you know, its relationship with the cars. That's why we think that the recovery of Europe is going to continue. Now, the only question is how fast it's going to be. So far, we've been wrong. We've seen it slow. It has been fast. And depending on the market. Let's see 2016. Obviously, all car makers are going to be very prudent for 2016 because everybody wants to plan for the worst and hope for the best in a certain way. So we are all planning with 1 or 2% growth, but we still think that this can go up higher. With a caveat is that if you are too conservative, you end up having shortfall into the delivery of cars. I mean, you know very well that there have been a shortfall on delivery of engines in Europe in 2015 that handicapped many car makers. And humoristically, it started with diesel engines. I mean, at the beginning of the year 2015, we could not provide enough diesel engines in Europe. So, to make it short, I frankly think that there is no reason to think that Europe will not come back to the level where it was in 2008. This being said, it may take some time.
Go ahead.
You just mentioned that Nissan intends to keep its lead in electrification of vehicles because, you know, the Leaf has been such an important vehicle for you. But you also mentioned that you think the primary barrier to people adopting electric vehicles is not range, but charging stations. Since you said that, are charging stations and creating a visible charging network something that Nissan is going to take the lead in, or is that something you're going to hand off to a third party and kind of rely on them to do that for you?
We are neither out nor in. That means what we do is we lobby, and depending on the country, we have different attitude. You know, in Japan, we don't do the same thing than in the United States or in Europe. But I don't think this is going to happen by car manufacturers making effort alone, or by the public sector doing an effort alone. It's going to have to be combined effort between car makers and cities, states, countries. The reality is every time you see charging infrastructure developing, it's much obviously easier for us to sell electric car. The relationship between the two is obvious. Yeah.
Hello.
I don't know, maybe, Jose, can you give some examples? I mean, I remember that at a certain point in time, 50% of our sales were made in Atlanta.
Yes. So on this point, what I wanted to mention is that we have made a significant progress in terms of increasing the charging infrastructure. So actually, we announced recently an agreement with BMW by which we are opening 120 quick charging stations, which will add up to the existing ones. So by the end of this fiscal year, we'll have around 1,700 quick charging infrastructure stations in the US. Plus, we have roughly 20,000 of the standard ones. And actually, Nissan has been very pioneer as well by announcing a partnership and conditions in more than 22 cities in the United States, what we call the no charge to charge. And what we've seen is that in states where the incentives have been dropped, but the infrastructure is the correct one, we are growing. Actually, the Leaf sales, even of the former battery one, the new one we launched in December, we've seen a growth of 40% in the states which are not incentivized based on the best charging infrastructure.
Thank you.
Hello. In this race of electrification of vehicles, which are going to be the way for Nissan? Are you going to develop more affordable cars or luxury cars? Or you're going to spread both ways?
No, we are at the heart of the market. We said from the beginning, we did not approach premium. So we left other people develop premium. We concentrated on the heart of the market, and that's why we came with Leaf for Nissan and Zoe for Renault. And then we went light commercial vehicle because we believe that this is where most, I mean, if you really want to make difference in terms of emissions, that's what you need to address. So we're going there. It doesn't mean that on premium, we will not move, but this is not our priority for the moment. I think our priority is mass marketed product at the heart of the market.
Mr. Ghosn, a question over here from the Associated Press.
Hi, I was wondering if you could talk about luxury sales in the U.S. Do you still see them growing over the next couple of years, still more quickly than the rest of the industry, not as quickly? Is there any such thing as peak luxury demand, and have we reached it?
Well, this is an interesting question because we have been debating this with Jose, who is heading North America, and with Roland, who is heading the business unit of Infinity. Maybe you want to give your opinion, Jose, and maybe Roland, about where do you see the premium market moving in the US?
Okay, thank you, Mr. Ghosn. So actually, currently, the premium market in the US is representing 11.6% of total market, 2.03. And then while we believe this share of total market is going to grow, our view is that in the next couple of years will grow by maybe 11.8%, which is really, I would say, marginal. So a little bit more than 2 million, maybe 2.1, something like this. So we see clearly an increase, but not a dramatic sudden increase. What we really see, indeed, is that very similar trends in the premium market compared to the general market, in the sense that the compact SUV, where with Nissan we compete with Rogue, and with Infiniti we compete with the QX50, is becoming the star. And actually in the premium, the growth is even greater. And we've enjoyed recently with some actions, the introduction of the long wheelbase and the growth in this segment of more than 5 to 6 times the last few months with the QX50.
Yes, and maybe to add to this, one of the characteristics that you can see is not only the trend towards SUVs and crossovers, which we are fueling with new models, but also a downsizing trend, also in the US. So we have the QX50, as just mentioned by Jose, largely successful, but then also with our new model, the QX30, which is a compact crossover, we're going to tap into that development and that customer potential. So while the overall market most probably will be in the range as just outlined, we see a lot of opportunities for Infiniti still with those new products and still going into those segments specifically where there is a growth.
Stephanie Wallcraft, Toronto Star. Sort of along the same lines, with the focus on electrification and autonomous driving, where is Nissan Group positioning product planning, and where do you see the development of performance vehicles and enthusiast vehicles fitting into the market in the longer term, 5 years, 10 years?
Yeah, well, the only thing I would like to say is that performance vehicle, enthusiast vehicle, totally compatible with electric car, autonomous drive. There was a perception that electric car were a little bit incompatible with performance. I mean, we have even a Formula One race with electric cars. Autonomous drive, some people say, well, but you know, if you develop autonomous, well, where is the pleasure of driving the car? Well, autonomous drive is just giving you the choice about you want to drive manually, you can. If you want to let the car drive you, you can also. It's not replacing the driver. It's just giving the driver the choice of driving or not driving whenever he wants. Connectivity, etc. All of this, in my opinion, totally compatible with high-performance cars. So I don't see any incompatibility or any change we need to do in terms even of organization to preserve the car for enthusiasts or the performance cars. On the contrary, you're going to see a lot of technological development around these lines.
Any other questions? Okay, I think that concludes our Q&A. Thank you, everybody, for attending. Thank you, Mr. Ghosn.